These are the 5 rules that made my trading boring, like painfully boring. But they are also the reason I became consistent. And if you are still overthinking, jumping between strategies and stuck at break-even, I guarantee you are breaking at least 3 of them without even realizing it. So let's start with the first, which is not even a mistake. Let's say you open a trade. It's a perfect setup. You tell yourself, I will just let it run. But 2 minutes later, you are already checking MT4. You are watching the trade go into positive, then negative, then positive again, and suddenly your brain starts whispering, maybe the setup is not aligned with the higher time frames, maybe I should close it, maybe secure some partials at least, even though nothing has changed. In fact, you barely entered the trade but already act like something's wrong. Why? Because you saw money move. Watching your trade go up and down is not productive. There is literally zero benefit in it. You are not responding to anything. You are just chasing dopamine. And that's why you move your stop loss, exit early, and stress for no reason. You didn't get any smarter. You didn't make more money. You just got manipulated by your own screen. Many years ago, I used to check my trades on MT4, and it was not a problem until I hit a losing streak. Then I started checking the trades every few minutes instead of every few hours. And it cost me a lot of money, not because the trades were bad, but because I couldn't sit still. Even if I didn't close or interfere with the trade, I was way too emotionally involved just from watching it. And that led to have even more stress and more anxiety about the next trade, which made me check my MT4 even more often. After this deeply traumatic experience, here is what I realized. Trading view shows me what I need: structure, levels, stop losses, take profits. And MT4 shows me the one thing I don't need to see: the money. As that's the thing what makes me act emotional. And if you would want to find some excuse to still constantly check and micromanage trades, think about this. You didn't touch a trade on backtest when you validated your strategy. So why interfere with your live trade just because you are emotionally uncomfortable? That's why I never open MT4 during a trade. Because the less I see money move, the more I can stay focused on sticking to the plan that's actually going to make it. But even if you stop checking MT4, that doesn't mean you are safe. Because most traders don't lose after they enter, they lose even before the trade starts. You stare at the charts, waiting, watching, hoping to make some money. Your setup is almost there, it's getting really close, and that's when you start thinking, what if it runs without tagging me in? What if I miss it by a pip? So you enter a bit early, just to be safe, and suddenly you are not trading your plan anymore. You are trading your fear of missing out. Look, constantly watching the charts doesn't give you nearly any benefit, but it gives you more chances to ruin your own setup. Because the more you watch, the more you want to do something. That's why you are watching. You became reactive. You force entries. You jump into house setups because it looks good. You start to believe, if I'm not watching, I am lazy and I will miss out on money. But in trading, the most dangerous thing you can do is feel like you have to work to make money. Look, when I was glued to the screen for hours, I felt productive. I felt like a real trader, but my results were showing otherwise. So once I started placing limit orders with trading the alert and then just walked away, profits finally started coming in. Not because I got any smarter or I changed strategies, but because I finally stopped interfering. A valid setup doesn't need your supervision. It either gets activated or it doesn't. It plays out or it doesn't. One thing is for sure, you watching the candles go up and down won't improve it. It just gives your emotions a chance to step in. And if you are not planning to follow your emotions instead of your plan, then why you are watching it? There is no upside. That's why I just set my limit, I set the alert, and I walk away. Because the less I see, the fewer mistakes I am able to make. So let's say you start using limit orders. You place the trade, step away, and wait. Sounds easy, right? But even then, your brain will find a new way to mess with you. And it usually happens when you start looking for extra confirmation. Let's say you find a perfect entry on your structure is clean, levels are valid, everything lines up, but then you get curious. You zoom out to the higher time frame, that one looks bearish, zoom out once again, that looks like a consolidation, and suddenly you don't know what to do. You are caught between different signals and all of them are just making you hesitate. Because more data doesn't mean more clarity. It means more contradiction. One time frame says long, other says short, and now you are not analyzing anymore. You are just looking for a reason to doubt your own plan. You start seeing ghosts. Maybe it's a fake out, maybe higher time frames will push it down, maybe I should wait, but all you are doing is delaying the decision you already made. And in that delay, you either overthink or talk yourself out of the trade that would have worked. That's not precision. That's not sticking to your plan. I used to scroll through like 3-4 time frames on every single setup, and each time I did, I ended up hesitating or skipping completely. Not because the trade was invalid, but because I couldn't commit. I had too much doubt. Look, you don't need multiple time frames to be profitable. You need one time frame and a process that works on that time frame. Because every time you add a new one, you add a new layer of conflict, a new way to second guess yourself. But trading isn't about analyzing from every possible angle. It's about building trust in one clear signal and executing it every single time for months and years. So when I realized this, I finally stopped trying to align the stars across 5 time frames and just started using one. Because the real clarity doesn't come from more information. It comes from removing the noise. So let's say you simplify the process. You are focused, one setup, one execution, but here is the catch. Even the cleanest strategy can get corrupted. Not by logic, but by the way your screen looks. Let's say you enter a buy position. You see a massive green candle and your brain lights up. This looks strong, this will be a win. But then a few minutes later you come back and it turned into a huge red candle. Suddenly you feel the pressure. Even if your setup was valid 5 seconds ago and you are so sure it will be a win, now you instantly start doubting it. But nothing really changed, only the color of the candle. And I'm sure greed doesn't mean buy, red doesn't mean sell. We wish it would be that easy, but your brain can't help it. So instead of seeing candles as neutral data, you start subconsciously attaching meaning to them that isn't even there. Bullish bias, bearish bias, risk of reversals, hesitation, all of it caused by something as simple as colors on your chart. And now your edge is being filtered through subconscious bias, not actual logic. Look, once I turned all my candles black, I saw price action for what it really was. Structure, flow, simplicity. Now, it takes a few hours to get used to, but it's more than worth it. Because your trading decisions should be based on market structure, not color psychology. Candles don't care what they look like. They are just printing data. But when your brain starts assigning meaning to a color and it's getting uncomfortable, it looks for shortcuts. And in trading, shortcuts are usually just excuses to break your plan. So I use one color for both up and down candles. Because when my screen is neutral, there are no vivid colors on it, nothing manipulates my decisions. So now you are thinking clearer, one time frame, clean candles, solid entries, but there is still one more enemy left. And this one makes you feel smart, but it silently destroys your edge. Look, you already added everything. Indicators, trend lines, supply and demand, smart money, chart patterns, liquidity zones. Your chart looks like a war map, but your results still inconsistent, still emotional, still stuck at break-even. Why? It's not because something's missing, but because there is way too much. Let's be clear. Complexity doesn't create clarity. It creates options, and options kill discipline. Because now every trade becomes negotiable. Maybe I will enter if the RSI lines up. Maybe I will skip this one. The order block doesn't look right. You can justify anything. But the truth is this. You are not following a process. You are hiding behind one. Because deep down, you are scared to commit to something brutally simple. Something that leaves you no excuses. Look, I tried out every single advanced method multiple times, but after struggling for more than a year, I built one simple strategy and I used it ever since. Not because it's fancy, but because it makes money. And every tool and confirmation you add to your charts adds decisions. And every decision point adds potential for doubt, for inconsistency, for overthinking. Trading isn't about building a complex framework. It's about removing everything until only the edge is left. Something so clean, so minimal that you can follow it under pressure without hesitation. That's what creates consistency. Not more knowledge, not more indicators, but brutal clarity and elimination of decisions. So here is the rule I follow. If it doesn't directly help me to make money, it's gone. Because in trading, simplicity isn't a luxury. It's necessary for survival. So these were the 5 rules that made my trading boring. But finally, profitable. But even if you follow every single one, you will still fail if your strategy doesn't actually work in real market conditions. So if you want to know how to be sure your system has a real edge and it's not just wasting your time and money, check out this video.